I have indeed. Thanks, Mark. We're joined now by Scott Minerd, CIO at Guggenheim Investments. Scott, thank you for joining us today. I know you've been here for all of the 3 days. I don't know about you, but my brain is swirling from all of this. I want to start by talking to you about something we just heard about on Bloomberg's air, which has also been a recurrent theme here, which is the budget deliberations and the raising of the debt ceiling. Right. Politics, U.S. politics. How concerned are you about what's going on in Washington and its impact on the U.S. economy and the markets?
Sure. Well, I mean, with the approach of the debt ceiling, I'm really not overly concerned about what's going on. This threat that Congress won't pass the debt ceiling is really giving a lot of power to Congress to try to get some kind of commitments about deficit reduction, and I think that's a huge positive. I think the
pressure is a good thing.
Okay. And the fact this Treasury Secretary keeps extending the date and telling us we keep seeming to find more money.
Well, so is that helping or not? I mean, does the deadline and the degree of urgency that goes with that deadline serve us well or not?
Well, I think the sense of urgency serves us well, but I think we also need some time, because they're trying to build some kind of consensus. And what's interesting about this deadline getting extended is that while Treasury will tell you that it's Congress not passing the debt ceiling that's putting us in jeopardy of defaulting on our debt, the reality is there's more than enough tax revenue to continue to service the debt of the U.S. government. So a decision to default on the debt of the government really sits with Treasury, not with Congress.
Because they decide, Treasury decides which bills get paid and which don't.
Exactly.
So does that give you, is that a comforting thought or not?
Well, I think it's a very comforting thought, because at the end of the day, though the Treasury would like to put the responsibility on Congress, the reality is they know that they're going to be responsible if there's a debt default, and Tim Geithner's made it very clear to us that he does not want to gamble with the U.S. creditworthiness. So therefore, I would automatically assume default is really not on the table, though we may shut Yellowstone down this summer, and that might not be that
right,
good.
It won't be pretty. So as I said, you've been here for 3 days. Anything that you've heard cause you to shift, refine, change your outlook at all? For example, I know that you're bullish on U.S. securities. Still?
Right. Yeah, I'm bullish on equities. I think the thing that might be surprising is I'm bullish on Treasuries. And one of the things that came out of the conference is it was amazing to hear people talk about inflation and interest rates. Yep. And the presumption, every panel, every person in a group, was that inflation's going up and interest rates are going to go up. But interestingly enough, in one-on-one conversations, what I discovered was actually most people are short their duration targets. And therefore, if interest rates go down, it would be very painful for them. And they're actually basically afraid that rates will fall, which makes me believe that the likelihood of rates falling is probably higher than rising.
One of the interesting things that we heard in the Reading the Tea Leaves panel earlier today was Meredith Whitney saying that she was convinced that the Fed had something up its sleeve after QE2. Do you?
Well, it's interesting. When I listened to Chairman Bernanke's press conference last week, I walked away with a much different impression than most people, which was I was struck by the fact that he plainly left the door open for QE3, and that in addition to that, he outlined for us what it would take to do it. If you remember his comment about the trade-off between inflation and more monetary ease, back when he decided to QE2, that since inflation had ticked up and prices had ticked up, it made the trade-off less attractive. Well, he also told us in the same speech that he believes that price pressures are transient, so that in the future, price inflation will probably go down. Well, if price inflation goes down, that trade-off becomes more attractive for him again, and so the door is wide open in my mind to do more of this.
All right, we'll have to keep an eye on that and other things. Scott Minerd, thanks for joining us, as always, from Guggenheim Partners.